Hello guys and welcome to Hakman Traders. In this video I'll be showing to you guys what is diversification of stocks. Now for beginners like in the beginning when I was starting to trade, I used to diversify my portfolio and still I'm diversifying my portfolio. So I've learned that over the period of years, it is also said in the technical analysis as well, the technical analysis of the financial markets. So it is also said in that book as well that diversify your portfolio. Now diversification is for the purpose of if you're not sure about a certain stock, like if you're not sure about what how the certain stock will perform, instead of investing into one stock, you diversify your portfolio. You invest into two or three different stocks. So you invest into two or three different stocks. Now if now the benefit of this is that if one stock grows, if one stock decreases in value, the one will increase in value. So this is how stocks work. So this is how diversification work. Now the side effect of it is that if you invest like if you invest into two or three different stock, like if you diversify your portfolio, and then what will happen if all of the prices drops? So that can also happen. So you'll have to be aware of both of the situation, and you'll have to be okay. So let me show you with an example. This is stock A, this is stock B, this is stock C, and this is save. So let's say you have certain amount of money and you've divided into four different sections. Out of those four sections, you've invested three portions, and the other portion you save for later investment. So in case if any one of these prices drops, you would buy in that share. Now let's say if you have invested in this stock A, the chance of this stock was either to go up or go down. So it was the for only when you invested in this stock. So this would happen when you have invested only into one stock. So the chances of it going up or down would be 50 to 50, 50% up and 50% down. So this would be the chances of it going up or down in case of investing into one stock. So in this method, like you can see, uh, the chance of it is 25, 25 and 25%. This one is safe, maybe 33, 33, 33. So this type of yes, it is 33, 33%. 33, 33%. So it would go up 33%, like something like that, I don't know. Or maybe it would go down. So its chances is that it would go up, like out of these three it would go up, out of these three this would go up, out of these three maybe this comes down. But what will happen if all of these, let me show you, this is done with example. So what would happen if all of them drops? So what would you do now? What should you do in this case? So in this case I would suggest that hold on to your stocks. Now besides this, this is not this is also important, but there is much more important thing than this, that you should do your risk management, your stop loss, your take profit. You should do that calculation for, like, should you that you should not lose in much of your money or much of your investment into a certain stock. So that you should do before investing into any of the stock, investing anywhere. So because that is important before investing, and whether you're diversifying or not, you should use that method as the method of stop loss, or using stop loss, or using the take profit as a stop loss, because that is highly beneficial and you will benefit from it later on while trading in the stock markets, while trading stocks. So like I said, when you diversify your portfolio into two, three or four different stocks, the chances are, like, if one stock increases in value, the chances is that three of them decrease in value. So this has also happened to me. Like I've experienced this myself. Instead of diversifying into two, three, or four different stocks, diversify into two different stocks. Or let's say it is better that you should invest into one different stock, one stock. Sorry, one or two different stock. That is enough. If you're sure about a stock, if you're 100% sure about a stock, then invest into a single different company or single different stock. But if you're not sure about that company, if you're not sure about that company or stock, then diversify your portfolio, invest into two or three different stocks, just for the sake of that you should not lose enough of your money or enough of your profit. So that you can do as well. And when you invest into one different stock, the chance of it is 50-50. Like it would go either 50% up or 50%. Now this is a strong support level at this point, because I've recognized it now. From this point onward, the stock would increase in value, and it would it would increase in value, and you'll see how much profit it will give you once it start to go up. Now for quite a long time it is now trading in a side trend, and now you'd see that it would go up further when you're further trading the stock. So when you diversify into two three different stocks, your whole profit, your whole loss is diversified. But if you invest into one company, no matter how much the stock increases in value, you would get much more profit, as much as you've invested into one. So just think about that. Instead instead of diversifying, invest into one. So that's it for today. Hope you guys are enjoying my videos and want to learn more about the stock market or the forex market. All I need you is to support my channel by hitting that subscribe button and comment down below, as your feedback is valuable for me. Goodbye.